A strong earnings season in the U.S. and continued signs of an economic rebound have helped stocks reach a series of record highs. But as equities continue to rise and amid high valuations, some investors are becoming increasingly worried about what may lie ahead. From the potential for higher than expected inflation and higher taxes to concerns about peak growth, is this as good as it gets? Let's break it down. So first, how is the season shaping up? In a word, exceptionally. Companies continue to post substantial beats to sales and even more notable beats to the bottom line. Of course, along with the beats come rising expectations, and analysts have already upped the ante this year by a full 10% since January and by 6% for 2022. Now, we think companies will chin that higher bar, riding the tailwind of extremely strong economic momentum and an accelerated pace of global growth. So, it is likely that we're close to a peak in earnings growth, but not peak earnings. Next, what's been the market reaction to the earnings? In a word, muted. The market has not reacted overall to the beats, and with valuations already elevated, the presumption is that the results are simply living up to the high prices being paid already for earnings relative to history. Now, although continued low interest rates and the dramatic changes in the sector composition of the market will support higher multiples relative to long-term averages, we do anticipate some contraction from the current high level. And last, are there any areas of concern? The sharp rebound in demand has been met with some supply challenges. Supply chain constraints are impacting the ability to grow sales and setting up for some potential margin pressure. There's also the potential for a higher corporate tax rate to crimp results, and on that score, we can offer some consolation. We think negotiations will result in a rate closer to the mid-20% range versus the 28% proposal, and if it does come, it will be during a time of exceptionally strong results. This may provide a buffer of sorts to the direct impact. And at the end of the day, with muted market reaction to a stunning season so far, it is clear that a lot of good news is already baked into the U.S. equity market, but there is still room to go here with a continuation of exceptionally strong corporate results.